In this video, we'll be looking at balance day adjustments with a focus on prepaid expense and accrued expense. But first, let us revisit some of the accounting assumptions. Here is the starting point of our business. The first assumption relates to the going concern assumption, which assumes that the business goes on and on and on and on and on. Therefore, we need the period assumption, which divides the life of the business into periods of time to allow results to be compared, such as changes of financial performance and financial position of the business. But what do we include in each period? This is when we apply the accrual basis assumption, where revenues are recognized when earned and expenses recognized when incurred. And this is the assumption on which the balance day adjustments rely upon. Balance day is the cutoff date for a period, and the period could be a month, a quarter, or even a year. So what's the point of balance day adjustments? As mentioned earlier, we are applying the accrual basis assumption. So therefore, we need to adjust the revenue and expenses so that the accounts show revenues earned and expenses incurred in the particular period. There are different types of balance day adjustments. In this video, our focus will be on prepaid expenses and accrued expenses. Prepaid expenses. Basically, they are expenses that are paid but not incurred. So, what is it? Using this example here, on the 1st of April, rent is paid in advance for 6 months, totaling to $6,600 including GST. Rent is consumed as the premise is used. As such, the prepaid expense is a current asset. The economic benefits of the prepayment is consumed as the property is used in the next 6 months. Let us have a look at how we record the payment of prepaid expense. Here in this example, on the 1st of April, we are making a cash payment for prepaid rent totaling to $6,600 including GST. First, we start off by crediting the bank account for the total amount paid, which was $6,600. Then we debit the prepaid rent account for the amount of $6,000. It is a current asset to the business because we are expecting to receive the economic benefits from renting the property in the next few months. Then we also recognize the GST, which was $600, that is debited to the GST clearing account. Please take note that the GST is recognized when the prepaid expense is paid for. So on balance day, we need to make another adjustment to recognize the expense that has been incurred in a period. For example, in this case here, our balance day is on the 30th of June, and we need to recognize the rent expense incurred for the period ended 30th of June. The rent per month is $1,000, and we exclude the GST because we have already recognized the GST when we have made the payment earlier on the 1st of April. So here's a visual to show how the $6,000 rent has been spread across the 6 months. And on the 30th of June is our balance day. So here we can see that 3 months of rent expense has been incurred, totaling to $3,000. So on the 30th of June, we need to record a debit to the rent expense account and credit to the prepaid rent expense account because we are recording 3 months rent incurred. Alright, so here in the general ledger accounts, we can see how they look like once we have posted the general journals. Starting with the prepaid rent, we can see that we have debited the account on the 1st of April for the amount of $6,000. The cross-reference is against the bank account because we have made the payment of the prepaid rent expense in cash. On the 30th of June, we are recognizing the 3 months of rent expense incurred, totaling to $3,000. The corresponding entry is against the rent expense account where we are debiting it for the same amount of $3,000. Because the prepaid rent is a current asset, it is a balance sheet account. Therefore, we balance the account. So $6,000 on both sides. And here we can see that we have a balance on the 30th of June that we are carrying forward to the 1st of July. Rent expense account is an income statement account. Therefore, we close the account on the 30th of June. And here we close the account to the profit and loss summary for the amount of $3,000. Next, let us look at accrued expenses. So with accrued expenses, they are basically expenses that have been incurred but not paid. So our first example would be accrued wages, which does not attract GST. So what is accrued expense? Let us have a look at this example here. Excuse me, sir. I've worked 1 week now. When am I getting paid? I owe you, mate. The next payday is not till next week. The wages for the week you have worked have been accrued. In other words, the accrued expense is some sort of current liability. In this case, the expense is incurred when the employee worked for the period. Therefore, the business is obligated to pay the employee for the work done within the next 12 months. We're going to record the expense incurred. In this example, the employee is paid $1,260 per fortnight, and that's every 2 weeks. So the last wages was paid for the period up to 25th of June inclusive. The next pay cycle will end on the 9th of July when the employee will be paid again. So here we can see between 2 pay cycles there are 2 weeks, 14 days. 30th of June is our balance day, and what we can see here that there are 5 days in between 25th of June and 30th of June when additional wages have been incurred. So in this case here, we need to calculate the amount of wages incurred over the 5 days, and this totals to $450 wages expense. From the previous slide, we can see that as at the balance day, 30th of June, our employee has worked the additional 5 days. So even though we don't expect to pay the employee until a later date, which is on the 9th of July, we still need to record the expense that has been incurred for the period ended 30th of June. So here we debit the wages expense for the amount of $450 and we accrue the wages by crediting the accrued wages account for $450. So in this case here, we are recognizing the 5 days of wages that were incurred but owing. Here in the general ledgers, we can see that we have debited the wages account on the 30th of June for the amount of $450. And the accrued wages has been credited for the same amount. Because the accrued wages is a current liability, it is a balance sheet account. Therefore, we are balancing the account as at 30th of June. Here we are carrying forward the balance of $450 owing to the 1st of July. Our wages expense account is closed because it is an income statement account. And we are closing the account to the profit and loss summary on the 30th of June. So what happens when the expense is paid in the subsequent period? So in this example here, as mentioned earlier, on the 9th of July is when the employee will be paid next. In this case, the employee will be paid the total amount of $1,260, which relates to the payment for the fortnight ending 9th of July inclusive. But we need to make sure that we remember that we have already accrued the expense for the 5 days of wages already incurred in the previous period, and this amounted to $450. The balance of $810 have not yet been recorded as an expense as at the 9th of July. On the 9th of July, we start off by crediting the bank account for the amount of $1,260. This is the total amount that is paid to the employee. Out of the $1,260, $450 is debited to the accrued wages account because this relates to the wages incurred in the prior period. The balance of $810 is debited to the wages expense account because this relates to the wages expense for the current period. Here in our records of the accrued wages, we can see that we have a balance brought forward of $450 from the previous month. In other words, we are saying that on the 1st of July, we have an amount of $450 of accrued wages owing to the employee. So again, remember the 9th of July, $1,260 is paid from the bank to the employee. So on the 9th of July, out of the $1,260, $450 is relating to the accrued wages that was owing to the employee, and the balance of $810 relates to the wages expense that is incurred in this current period. Our next example of accrued expense relates to a transaction that attracts GST. So here in this example, on balance day 30th of June, an extra $300 worth of electricity has been incurred. So to recognize this electricity expense incurred, we debit the electricity expense account for $300 and we credit the accrued electricity account for the amount of $300. Here in the subsequent period on the 4th of September, we are making a payment of $1,650 including GST for the electricity bill. So on the 4th of September, the total amount of $1,650 is coming out the bank account. Therefore, we credit the bank account for the total amount. We are also recognizing the GST paid on the expense of $150 that is debited to the GST clearing account. With the remainder of the balance, we need to decide how much we are allocating between the accrued electricity and electricity expense for this period. So because we have already accrued electricity for the $300 that was incurred in the prior period, therefore we debit the accrued electricity account for $300. The remainder of $1,200 relates to electricity expense for this current period. Therefore, we are debiting the electricity expense account for the amount of $1,200. So here we need to take note that we are recognizing the GST when it is paid on the 4th of September. In summary, let us have a look at the visual comparison between prepaid and accrued expense. Here I'm going to use the rent expense of $1,000 plus GST per month as an example. With prepaid expense, we are making an upfront payment of $6,600 including GST on the 1st of July for 6 months rent in advance. As the months go by, we are consuming the benefit of the prepaid rent, and therefore we are incurring the rent expense. In comparison, with accrued expense, we are accruing the rent that has been incurred from month to month. And at the end of the 6 months, we are given a bill by the landlord to make a payment of $6,600 for the rent that has been accrued over the 6 months. Now that we understand the nature of prepaid and accrued expense, we can report them accordingly in the balance sheet. So prepaid expense is an expense that is paid but not incurred. Therefore, we expect an inflow of economic benefits in less than 12 months. As such, we report it as a current asset in the balance sheet. On the other hand, the accrued expense is an expense that has been incurred but not paid. Therefore, we expect an outflow of economic benefits in less than 12 months. Therefore, we report as a current liability in the balance sheet. The end. Thank you for watching.